So say more of the Western world, they call it sometimes collective investment schemes.
Yeah.
What it does, it practically gives retail clients a chance to pool funds together.
Ashburton portfolio manager Ralf Duvel joins me in studio to talk about unit trusts and collective investment schemes that offer a flexible and convenient solution tailored that's to your financial goals. A very good evening to you, Mr. Ralf, and welcome to 99 FM.
Hi, Sean. Thanks very much. Yes, good being here. Thanks for having me.
Are you enjoying the weather?
I'm enjoying the weather very much. I think winter weather has been very forgiving, or came to the party a bit in the last 2-3 weeks.
Definitely, I've got to agree with that. Your day, how's the day been coming along?
The day was, I think, fairly good.
Yeah.
Yeah, got a lot of things done.
All right.
Markets went our way, so yeah. No.
Great. So you are the portfolio manager at Ashburton. What does your day-to-day look like? A typical day?
Yes, I look after our cash and fixed income portfolios at Ashburton.
Yeah.
So those are pooled funds and segregated mandates totaling around about, I'd say, 13 billion Namibian dollars in size.
Mm-hmm.
And what we do on a daily basis, obviously, manage these portfolios, the ins and outflows of these funds, and to provide liquidity to clients and give clients the option to invest with us, and then invest the funds on the behalf of clients, on behalf of the mandate of the portfolios, and look at the portfolios perform according to mandate, according to benchmark within its framework, and look after the assets, do research on our behalf, read quite a lot, and then try to forecast markets, try to forecast inflation data and happenings around the world, and see how it impacts currencies, stock markets, and fixed income markets around the world. So I'd say it's quite a...
Sounds quite like a lot.
It's never a dull moment, and each day is different. I mean, you'd have your usual things that you skip through every day, in terms of flows, in terms of data and so. But I mean, markets are continuously moving, and I mean, economies are continuously growing and contracting in various parts of the world, so it's very interesting. I enjoy it very much.
You're here to talk to us about unit trusts tonight. Perhaps it's a term that people have heard. Maybe you've seen on billboards, maybe heard somewhere on the radio. But what is it in layman's terms? What would you say are unit trusts?
Yeah, so Sean, in South Africa and Namibia, we refer to unit trusts, and in say more of the Western world, they call it sometimes collective investment schemes.
Yeah.
What it does, it practically gives retail clients a chance to pool funds together. So you practically in smaller chunks together into one big portfolio, into one big pool portfolio, which we then manage on their behalf. So each investor can climb in at any very day. So every day we price these portfolios or these units in the portfolios, and investors can climb in every day or out of the portfolio. So they can invest every day or withdraw every day. So we price the portfolios, price the units, and then give investors a chance to participate in the ups and the downs of the market. We then pool these funds and invest them according to mandate. You'd get more conservative approaches to portfolio, or like conservative portfolios, which we call money markets in our world, where we practically only invest the funds with banks in the common monetary area, being Namibia and South Africa, and where investors usually want capital stability, and then liquidity, obviously, and thereafter only seek higher returns than they would get from an average call deposit as such. And investors have got the benefit of pooling the funds, and we then as managers go to financial institutions, and instead of investor coming, for example, to the financial institution with a 500,000 or 200,000 deposit, we then knock on their doors with, say, 200 million and get a higher rate on behalf of the investors. And can pass that on again in terms of the higher rate. And these economies of scale, we make the economies of scale work for these investors then.
Okay, perhaps maybe break it down for us. How do you invest in a unit trust?
So you've got unit trust management companies, which are usually attached. There are many that are attached to either life houses. For example, you get the likes of Sanlam or Mutual and others, Liberty Life, Momentum. Others attached to banks, for example, Capricorn being the investment arm of Bank Windhoek, or Ashburton ourselves being the investment arm of First Rands, Standard being the investment arm of Standard Bank. And you can approach these, and with a fairly small amount of money, ranging from 10 to say 100,000, you can participate. So you practically deposit your funds with these management companies, and they then invest on your behalf. You open an account, and at any given time can withdraw from these accounts. Again, these investment accounts are linked to your bank account, and by that you can climb in and out of these unit trusts.
Okay. Can you perhaps also talk to us about unit trust managers and the different types of unit trusts that exist?
Yeah, so, I mean, Namibia is known as a fairly conservative investment environment. So, bulk of our unit trusts are fairly capital stable orientated, being in money market funds, fixed income portfolios. But you'd get various mandates on unit trusts. So, like I said, a very standard one would be a money market fund where you get practically a cash return, 7 or 8% return, fairly standard across all investment houses usually offer one of those options. And as you move higher up the risk curve, you get fixed income portfolios that will, for example, provide you with slightly higher returns, but there your capital already will start to move. Meaning, for example, if you've invested $100 million on one day, the next day it might be worth 102 or it might be worth 98, So you already obtain like a bit of capital fluctuation.
Sure.
And as you move along, you get blended portfolios that invest, for example, in like I said, bank paper or deposits with banks, but also stock markets or property markets. And by that, you can obtain a blend, like a managed fund or a balanced fund, what we call. And you also have specialized funds that, for example, only invest in the stock market or only in a region in the stock market or a specific sector in the stock market, for example, only in resources or only in financial stocks. But once you go into equity, I mean, stocks being equity, you'd have a much higher degree of volatility, which you'd need to see through. And because you face that higher volatility in the markets and the ups and downs, you'd need to have a higher time horizon, a longer time horizon as you enter your investment. So there you'd need to have at least a time horizon of 4 to 5 years. When you place your funds, you need to know you can access it within 4 or 5 days whenever you need to. However, it might be down, it might be 20% down or so whenever the stock market do correct downwards. Say after high events like COVID or global financial crisis or so, you'd see large corrections on the stock market, which obviously then directly affect your investment.
All right. If you're just getting onto your radio right now, you are listening to your favorite radio station, your inspiration station, 99 FM with Nishon in the evening. We're talking to Ralf Duvel. He's the portfolio manager at Ashburton. Just really talking about unit trusts, just getting to understand the entire concept, the different types of unit trusts that exist. Basically just they offer a flexible and convenient solution tailored for your financial goals. Perhaps, Mr. Ralf, why would you say that unit trusts are an appropriate investment vehicle for most investors? Why is that?
Yes, I think very much for every investor, unit trusts are an appropriate vehicle. For every retail investor, and then I talk, tailored institutions like pension funds, they have a very specific outcome they require. But I think for all other investors, unit trusts are appropriate because you would get various unit trusts that are really tailored towards needs of where you cover 99% of the spectrum of all investors, from capital guaranteed, highly liquid unit trusts for the very short term. If you want to place funds for only, say, a month, 2 months, half a year or so, and get a better return than you would get on an average bank deposit, for example, these are already appropriate. Or if you have a time horizon of, say, you can place it longer for 18, 24 months, then we would blend it already with a bit of, say, equities, which then can already give you inflation plus 2 or 3% over the time period, which you'd obviously try to achieve an inflation-beating return, a real return. And therefore, I think there are unit trust products out there for each and every investor and across the spectrum. So I think in Namibia we've got probably in the region of between 50 and 60 different, or around about 70 different unit trusts.
Wow.
And like I said, each asset house has got the fairly standard products, being money markets or income funds for that matter, balanced funds. And as from there you can get into more tailored products as well. So the range is practically endless.
Yeah, and just probably to close it off, how are they regulated in Namibia, these unit trusts?
So yes, we do have a fairly dated act, being the Unit Trust Control Act, that is still in place and obviously regulates the management of these unit trusts. However, if I'm just waiting for the FEMA Act to obviously at some stage to be passed on in Section 4 of the FEMA Act. directly speaks to unit trusts and regulates unit trusts. So there is some legislation in place to control these. And in addition to that, every unit trust, every pool investment has got a custodian, being a third-party bank that does look after the assets in the unit trust. So, for example, we as Ashburton might be the managers of the unit trust, but we have a third-party custodian, for example, a third-party bank that looks after and holds these assets in custody.
Sure.
So that's just an extra layer of security that's being placed in for regulation or for safeguarding the assets of these thousands of clients that daily participate in the ups or in the management of these unit trustees.
All right, Ashburton portfolio manager Ralf Duvel there talking to us about unit trusts and collective investment schemes that basically offer a flexible and convenient solution tailored to your financial goals. Thank you so much for taking our time to talk to us. I'm sure someone out there is enlightened by this as much as I am. So really, we appreciate it. Thank you so much, and we're looking forward to talking to you again next time.
Yes, thanks for having me, Sean. You guys have a pleasant evening.
And that's Wealth Talks here on your favorite radio station, 99 FM.
99 FM's Wealth Talks.
There we go. 10.